What is happening, crypto titans? Welcome back to Bitcoin Bulletin, where we dive headfirst into the news that's shaping our digital future. The market is absolutely electric right now, buzzing with innovation and strategy, and if you're not plugged in, you're missing out on the biggest moves. We've got a rapid-fire lineup today that you absolutely cannot afford to miss. Get ready because we're breaking down the predictions, the big buys, the market shocks, and the institutional shifts that are setting the stage for what's next. This is where you get the edge, the inside track, the pulse of the market, all served up with the energy you expect. So buckle up, hit that like button, and let's get right into it. First up, we're talking about a vision for Bitcoin's future that's nothing short of revolutionary. Is this the ultimate hedge against inflation? We've got the details on a prediction that could redefine wealth over the next 2 decades. Then, we're shifting gears to the gaming world, where a major player is betting big on Bitcoin to power its next generation of Web3 experiences. What does this mean for the future of play and the asset itself? You'll want to see this. But wait, there's more. The market also threw us a curveball with a sudden, dramatic price swing that caught everyone by surprise. We're dissecting what happened, why it matters, and what it signals for the stability of digital assets. And finally, we're looking at the horizon with expert analysis on how institutional demand is fundamentally reshaping Bitcoin's long-term outlook. The numbers are staggering, and the implications are massive. Stick around, because this is Bitcoin Bulletin, and you're getting the unmissable updates first. Don't forget to like, subscribe, and hit that notification bell so you never miss a beat. Bitcoin's 30% yearly surge, a 20-year battle against inflation. Could Bitcoin be the ultimate inflation hedge for the next 2 decades? In a world constantly grappling with the erosion of purchasing power in traditional currencies, Bitcoin is increasingly being positioned not just as a digital asset, but as a fundamental store of value. Michael Saylor, the influential co-founder and executive chairman of MicroStrategy, has once again amplified his conviction in Bitcoin's long-term potential. He forecasts an astonishing annual growth rate of 30% for Bitcoin over the next 20 years. This bold prediction places Bitcoin in direct competition with, and arguably superior to, traditional safe havens like gold and government bonds. Saylor's argument hinges on Bitcoin's inherent characteristics: its fixed supply of 21 million coins, its decentralized nature, and its global accessibility, all of which insulate it from the inflationary pressures and political manipulations that plague fiat currencies. This isn't just speculative talk, it's the core of MicroStrategy's strategy. Since August 2020, the company has embarked on an aggressive accumulation of Bitcoin, transforming itself into the world's largest corporate holder of the cryptocurrency. Their latest acquisition added 3,081 BTC, for approximately $356.9 million, bringing their total holdings to a staggering 632,457 BTC, valued at around $46.5 billion. This consistent buying strategy, often referred to as dollar-cost averaging, has yielded remarkable results, with MicroStrategy achieving a 25.4% year-to-date return in 2025. The company finances these substantial purchases through equity offerings, demonstrating a clear commitment to Bitcoin as a primary corporate asset. Saylor's bullish outlook is not universally shared, with some analysts expressing caution regarding Bitcoin's inherent volatility. However, his perspective is gaining traction as institutional adoption accelerates. Japan's Meta Planet, for instance, recently increased its Bitcoin holdings by adding 103 BTC, bringing its total to 18,991 BTC. Furthermore, the U.S. has taken a significant step, with President Donald Trump signing Executive Order 14,096, establishing the Strategic Bitcoin Reserve. These developments signal a profound shift in how both corporations and governments perceive Bitcoin, moving it from a fringe digital curiosity to a core component of global financial strategy. This growing institutionalization is seen by proponents as a key factor in potentially reducing Bitcoin's historical volatility and increasing market liquidity, further supporting Saylor's long-term vision. The broader implications of Saylor's 30% annual growth projection are immense. If realized, it would represent a seismic shift in the global financial landscape, challenging the dominance of traditional assets and fundamentally altering how investors approach wealth preservation. While the sheer scale of such sustained growth remains a subject of debate, the underlying trend, Bitcoin's increasing acceptance as a hedge against inflation and a robust store of value, appears undeniable, especially in light of growing institutional and governmental interest. But is this aggressive accumulation sustainable in the face of market fluctuations? Join us next as we explore how a major gaming company is integrating Bitcoin into its future. Boyaa bets big on Bitcoin to future-proof Web3 gaming empire. Can a gaming giant leverage Bitcoin to build its Web3 future? In a bold move that underscores the growing integration of digital assets into mainstream business strategies, Boyaa Interactive International Limited has significantly expanded its Bitcoin holdings. The company acquired an additional 290 BTC for approximately HK $257 million, US $32.9 million, bringing its total Bitcoin reserve to an impressive 3,670 BTC. This strategic acquisition, funded through internal resources over a 3-week period, highlights Bitcoin's evolving role beyond speculation, positioning it as a foundational pillar for Boyaa's ambitious transition into the Web3 gaming sector. The purchase was executed in regulated markets and required a special disclosure due to exceeding pre-approved shareholder limits for such transactions, signaling the increasing regulatory scrutiny and compliance involved in corporate digital asset adoption. Boyaa Interactive explicitly frames its Bitcoin strategy as central to its Web3 transformation. The company views the cryptocurrency not merely as an investment, but as a critical component for developing its Web3 ecosystem and business model. By securing Bitcoin, which possesses a provably scarce supply, Boyaa aims to harness its potential as a strategic resource before it becomes prohibitively expensive or inaccessible. As of 2025, Boyaa was once a top 10 global public company in terms of Bitcoin holdings, though it has since seen its ranking shift to 22nd as more corporations enter the digital asset space. This indicates a competitive landscape where early movers are actively solidifying their positions. The impact of this strategy on shareholder value is already becoming apparent. Boyaa reports that its Bitcoin holdings per 10,000 shares saw a notable increase of 12% in 2025, reaching approximately 0.0516 BTC. This metric offers a unique perspective on how digital asset accumulation can directly translate into increased value for individual shareholders, akin to a modern interpretation of per-share book value in the digital age. Reflecting market confidence in this strategic direction, analysts have maintained a positive outlook on Boyaa stock, with the latest rating being a buy at a price target of HK $8.50. This move by Boyaa Interactive is part of a broader trend, particularly prominent in Asia and the US, where firms are increasingly treating Bitcoin as a strategic treasury asset. The growing regulatory clarity and institutional acceptance in these regions are fostering an environment conducive to such acquisitions. For example, Hong Kong-based Mingxing Group Holdings recently announced a substantial $483 million purchase of 4,250 BTC, further illustrating the surge in interest among public companies to allocate capital towards Bitcoin. Boyaa's decision to bolster its holdings aligns perfectly with this growing wave, signaling a long-term commitment to pioneering the Web3 gaming frontier. The competitive pressure to acquire Bitcoin before supply constraints become more acute is palpable. Boyaa's proactive approach can be seen as a strategic maneuver to secure a vital asset for its future ecosystem development and to hedge against the inherent volatility of the gaming market. With reports indicating that at least 160 public companies now hold Bitcoin in their treasuries, Boyaa's Bitcoin-centric strategy may well serve as a blueprint for other companies looking to integrate digital assets into their core operations and navigate the evolving landscape of the metaverse and Web3. But what happens when the market takes a sudden, unexpected dive? We're analyzing a flash crash that sent shockwaves through the crypto community Next, Bitcoin's $4K flash crash exposes market's fragile pulse. Did a sudden $4,000 price plunge reveal underlying market weaknesses? In a dramatic turn of events on August 24, 2025, Bitcoin experienced a sharp and sudden decline, plummeting by over $4,000 in a matter of minutes. This significant price action, observed by market analysts and traders alike, was characterized by intense intraday volatility. While no single catalyst was immediately identified, the rapid sell-off was largely attributed to price action dynamics within the market at the time. Such sharp, short-term price movements are a stark reminder of the inherent volatility present in the cryptocurrency space, often exacerbated by algorithmic trading strategies and the cascading effect of leveraged position liquidations. The immediate aftermath of the flash crash saw a surge in trading volumes, a common occurrence following such sharp declines. Historically, these spikes in volume can indicate increased liquidity, potentially leading to further price depreciation or a swift rebound depending on prevailing market sentiment and the return of buying interest. The rapid nature of the crash also suggests that automated trading systems, which are prevalent in today's markets, may have played a significant role in amplifying the sell-off, triggering stop-loss orders and cascading liquidations across leveraged positions. Market sentiment appeared to turn bearish following the event, with indicators likely showing a shift towards extreme fear. Institutional inflows, which had been a supportive factor for Bitcoin's price earlier in the year, reportedly showed signs of a temporary slowdown, with a noticeable dip in inflows into Bitcoin ETFs during this period. However, such sharp price corrections can also present opportunities for value investors, particularly if correlated traditional markets, such as the S&P 500 or Nasdaq, experienced similar downturns. This potential for cross-market correlation could attract investors looking for arbitrage or diversification opportunities during market dips. On-chain data provided further context, revealing a notable increase in the volume of Bitcoin transfers to exchanges during the price drop, signaling heightened selling pressure. Yet, it's also common during such dips for long-term holders, or hodlers, to see these as accumulation opportunities, with a significant portion of the Bitcoin supply remaining locked up for extended periods, indicating strong conviction among these holders. Technical indicators, such as the Relative Strength Index, RSI, on the 1-hour chart, dipped into oversold territory, hinting at the possibility of a short-term price reversal if buying momentum returns to the market. This incident serves as a potent reminder of the 24/7, high-speed nature of the crypto market. Traders actively participating in Bitcoin futures or options might have observed a spike in implied volatility, potentially creating opportunities for those anticipating a recovery through call options. Key resistance levels to watch for a potential rebound include the $60,000 mark, a level that has historically acted as a ceiling for Bitcoin's upward movements. Additionally, the Bitcoin Dominance Index saw an increase during the crash, suggesting that altcoins may have underperformed relative to Bitcoin during this volatile period. While the market can be volatile, what does the future hold according to the experts? We're diving into institutional demand, reshaping Bitcoin's long-term outlook next. Institutional demand reshapes Bitcoin's long-term outlook. Is surging institutional demand the key to Bitcoin's future price explosion? Bitcoin is increasingly capturing the attention of institutional investors and financial analysts, solidifying its position as a potential long-term store of value and a hedge against inflation. A recent report by Bitwise, a prominent investment firm, projects that Bitcoin could reach an astounding $1.3 million by the year 2035. This ambitious forecast is underpinned by an estimated compound annual growth rate, CAGR, of 28.3%, a figure that significantly outpaces traditional asset classes like equities, 6.2% CAGR, bonds, 4% CAGR, and gold, 3.8% CAGR. Bitwise attributes this projected growth primarily to Bitcoin's inherently inelastic supply, capped at 21 million coins, combined with a powerful surge in institutional demand. The report from Bitwise emphasizes a fundamental difference between Bitcoin's supply dynamics and those of traditional fiat currencies and global debt. Unlike currencies that are subject to monetary expansion and inflation, Bitcoin's supply is finite and predictable. The inelastic supply of Bitcoin, combined with continued demand growth, is the single most important driver of our long-term assumptions, the firm stated. Bitwise also suggests that the traditional 4-year market cycles, historically linked to Bitcoin halving events, are becoming less dominant as institutional capital flows increasingly shape market structures. The report boldly declares the 4-year cycle is dead. Bitcoin is no longer a retail-driven market, highlighting the transformative influence of Bitcoin ETFs and corporate treasury allocations. In parallel, other influential figures in the crypto space offer equally compelling, albeit varied, long-term projections. Michael Saylor, the CEO of MicroStrategy, known for his aggressive Bitcoin accumulation strategy, forecasts an even more ambitious target of $21 million by 2046. Saylor bases his prediction on Bitcoin's impressive historical growth, noting its appreciation from around $100 in 2013 to current levels, resulting in an approximate 40% CAGR. He also points to the psychological and economic significance of the 21 million coin cap, a limit expected to be reached by the year 2140, which he believes will continue to drive scarcity and value. Saylor draws parallels with historical financial forecasting models, such as Roger Ibbotson's 1974 predictions for the Dow Jones Industrial Average, to support his long-term outlook. Van Eck, another significant entity in the cryptocurrency investment landscape, maintains a robustly bullish stance with a year-end price target of $180,000. This forecast is bolstered by factors such as high CME basis funding rates, which have peaked at 9%, and substantial institutional inflows into Bitcoin products. Van Eck's research indicates that in July alone, exchange-traded products and digital asset treasuries collectively added approximately 126,000 BTC to their holdings. Furthermore, strong positioning in the options market, evidenced by a call-put ratio of 3.21x, signals considerable bullish sentiment among market participants. Despite the overwhelmingly positive sentiment and ambitious projections from various institutions, some analysts advise a degree of caution. While figures like David Bailey, a Bitcoin advisor to former U.S. President Donald Trump, argue that significant bear markets are unlikely for several years due to unprecedented institutional adoption. Others, such as C.K. Zheng of ZX Squared Capital and Pav Hundal of Swiftex, warn of potential macroeconomic risks. These include shifts in Federal Reserve policy or reversals in global liquidity, which could trigger market corrections. Ryan McMillan of Merkle Tree Capital suggests that while Bitcoin might avoid deep bear markets, it is unlikely to be entirely immune to volatility, with a potential cyclical top anticipated around the second quarter of 2026. Recent market data suggests a temporary cooling of Bitcoin's momentum, with apparent demand softening from a July high. Spot Bitcoin ETFs have also experienced reduced inflows, reaching their lowest point in 4 months. On-chain indicators reflect a fading bullish momentum, with the CryptoQuant Bull Score Index moving from an extra bullish to a bullish cooldown phase. Analysts note that new whale investors have been realizing profits, with substantial gains recorded since early July. Despite these short-term indicators, price support is anticipated around the $110,000 mark, a key on-chain level that could provide a floor against further declines. That wraps up our deep dives. What are the key takeaways from today's massive updates? All right, everyone, that's a wrap on today's Bitcoin Bulletin. We saw Michael Saylor doubling down on a 30% annual surge for Bitcoin. Boyaa Interactive is betting big on Bitcoin for its Web3 gaming empire. The market experienced a surprising $4,000 flash crash, and institutional demand is reshaping Bitcoin's long-term outlook with some eye-watering price predictions. Don't forget to smash that like button, subscribe to the channel for more essential crypto insights, and ring that notification bell so you never miss an update. Follow us on all social media platforms for real-time news and join the conversation in the comments below. We'll see you in the next one.